Welcome to MKR Unplugged's weekly scorecard, your 5-minute summary of everything that moved Indian markets this week and what to watch for in the week ahead. All the research, data, and portfolio tracking behind this update is powered by the Rupee Rakshak research team. Let's get into it. This was a week that started with caution, picked up strongly midweek on two big global triggers, and ended with Indian markets logging a modest but positive close. The Nifty 50 opened the week at around 23,978, and by Friday, closed at approximately 24,307, a weekly gain of about 0.21%. Bank Nifty was the stronger index this week, gaining 0.85% to close at 58,177. India VIX, the market's fear gauge, fell to 13.05, its lowest level in several weeks, signaling that anxiety in the market is coming down. That is a constructive signal. 1. Iran and the United States concluded indirect talks in Doha on Wednesday, focused on maritime traffic through the Strait of Hormuz. Qatar's foreign ministry cited positive progress. The next round of talks resumes after Ayatollah Khamenei's burial on July 9. Why does this matter for India? Because the Strait of Hormuz is where a large part of India's oil imports pass through. Easing tension there means lower crude oil prices, and that is good for every sector in India. 2. Crude oil prices fell sharply this week on the back of these Iran-US talks. Brent crude slipped below $71 a barrel. For India, which imports over 85% of its crude, this is a direct positive. Lower oil means lower inflation, more room for the RBI to cut rates, and better margins for companies across sectors. 3. IT stocks were the star performers this week. Infosys surged over 5%, HCL Tech gained 4.4%, TCS was up 3.5%, and Tech Mahindra added nearly 3%. The trigger? Falling oil prices and expectations that central banks may adopt a less aggressive stance if inflation continues to cool, combined with optimism on tech spending, drove bargain hunting in IT after a 4-day losing streak. 4. FIIs remained net sellers this week, offloading Indian equities worth approximately 2,077 crore. Their total selling for June reached 45,121 crore. However, DIIs stepped in strongly, investing our 11,100 crore during the week, with their total June investment reaching our 76,156 crore comfortably, offsetting foreign selling. The PRISM M-layer market regime is tracking this. DIIs absorbing FII selling at this scale is a structural positive for Indian equities. 5. India and the UK announced that July 15 is the official effective date for their landmark free trade agreement signed last year and now coming into force. This opens up British markets for Indian goods, particularly pharma, textiles, and technology services. A quiet but significant structural event. Now to our 3 PRISM portfolios. How did they do this week against Nifty 50's 0.21% gain? All data is sourced from live closing prices, tracked by the Rupee Rakshak research team. Portfolio holdings are confidential to subscribers. We share themes and directions, not specific names. PRISM Sector 25 plus 1.09% for the week, outperforming Nifty by 0.88 percentage points. This was driven by strength in the pharma and financial sleeves of the portfolio. The pharma theme benefited from Nifty Pharma's broader rally this week. In the financials theme, private banking names responded well to falling crude and a constructive rate outlook. The themes that held the portfolio back were capital market infrastructure stocks, where some profit booking was seen after their strong June run, and the power sector where weak PSU sentiment weighed. PRISM Select 20, negative 4.54% for the week. A difficult week for Select 20, which is the highest conviction, unconstrained portfolio. The pain this week came from 3 specific areas. Power transmission stocks saw sharp corrections after strong runs. One auto components name saw significant profit booking, and a mid-cap IT services company faced sector rotation pressure. On the positive side, OFSS Oracle's India IT subsidiary had its best week in months after strong Q4 numbers, and pharma names contributed solidly. Select 2.0 is a concentrated, high-conviction portfolio. Weeks like this are part of the risk profile, and the long-term blended CAGR estimate of 20.6% reflects both the upside and the volatility. PRISM Multicap 1.5 plus 0.28% for the week, broadly in line with Nifty. The large cap sleeve, 65% of this portfolio, was anchored by private banking and telecom names, which performed well. The mid-cap sleeve contributed through pharma. The small-cap sleeve saw some drag from capital market infrastructure stocks. Overall, a steady week for multicap, 1.5. A quick look at what the 5 PRISM scoring dimensions are signaling right now. P-price momentum, pharma, private banking, and FMCG continue to show the strongest momentum signals. IT has recovered after weeks of underperformance, momentum turning constructive there. Our business quality. The Q4 FY26 results season confirmed strong business quality in defense, financial services, and consumer discretionary names. The research team's Q1 FY27 rebalance completed in June was validated by those results. Institutional flows. FIIs were net sellers of Rs 311.8 crore on July 3. But DIIs bought Rs 1,784.40 crore on the same day, meaning domestic money is strongly absorbing foreign exits. The I layer is reading this as constructive domestic flows are the stronger signal right now. Forward scenarios. With crude falling, inflation cooling, and the RBI in a rate-cutting posture, forward earnings estimates are being revised upward for rate-sensitive sectors. Banks, NBFCs, and consumer discretionary names are looking increasingly attractive on forward scenarios. Market regime. VIX at 13, that is calm. The macro regime is positive, 7.6% GDP growth, 2.1% inflation, record SIP inflows of Rs 32,087 crore per month, and now crude oil cooperating. 3 things on the radar for the week, starting July 6. 1 U.S.-Iran peace talks to resume after Khamenei's burial on July 9. If they go well, crude oil stays low, which keeps the Indian macro tailwind alive. Any breakdown in talks and crude bounces, watch for that risk. 2. The India-UK Free Trade Agreement comes into force on July 15. In the days ahead, watch for announcements from pharma companies, IT services firms, and textile players on how they plan to benefit. 3Q1 FY27 earnings season begins in earnest from the second week of July. TCS results on July 10 will set the tone for the entire IT sector, and IT is a large weight in Indian indices. A beat there could push Nifty toward the 24,424,500 resistance zone that technical analysts are currently flagging as the key breakout level. All of this data, all of this analysis, and all of the portfolio tracking you see every week, that is the work of the Rupee Rakshak research team, and I thank them for making this possible. If you want to understand how the PRISM portfolios work in detail, or if you want to explore whether they are right for your financial situation, please visit ruperakshak.com. There is a SEBI-registered investment advisor on the platform who can walk you through everything. Everything on MKR Unplugged is for education and information only, not investment advice. Please consult a SEBI-registered investment advisor before making any financial decision. Subscribe, share this with someone tracking their portfolio, and we will see you in the daily update on Monday.